So the P&L interview with myself and David Mercer, CEO of LMAX Group. David, it was interesting earlier, quite an eye-opener for me, that we had a hedge fund panel and they're talking about strategies at work and strategies before that in terms of the big global macro thing. And someone suddenly popped up and said, well, maybe one of the diversifications for this thing is actually going to be Bitcoin or digital gold. So pretty timely. We're talking in terms of the crypto market structure. Let's put some perspective on this, because LMAX Digital, your digital assets exchange, is 2 years old this week.
Correct.
What would be your perspective of how that first 2 years has gone and the sort of the evolution of the market in that time?
Look, from an LMAX Group perspective, we're very happy with the trajectory of LMAX Digital. That's clear. When we launched it, we had no idea really what the take-up would be. But remember, and back to your former point, looking at the hedge fund world, this is still a very small asset class, if even you want to call it an asset class. Look, imagine a price of 10,000, that would mean an asset class worth 210 billion. So, I mean, Amazon's worth 5 times that. So, Paul Jones last week said he was putting, I think, 1 to 2% of his portfolio in Bitcoin or digital assets. That seems about right. That seems about what you'd all expect in terms of diversification if you're looking in your pension, for example. So, look, we just wanted to set up an institutional exchange for digital assets, and we did it on request from like-minded participants in our FX exchanges. And we're very happy with how it's gone. Even right now in a pretty quiet market, our ADV is 250 million. We've hit highs of a day. We've hit 1.25 billion and our highs back in June. So we're happy. It's contributing to the LMAX Group pot. But there again, revenue-wise, 10 to 15% of all our revenues. What's most pleasing is we have about 170, what I'd classify as institutional style participants on LMAX Digital. So we're never going to hit the retail pumps you see at weekends, for example. I mean, the likes of Coinbase have millions of customers. That's not what we do. But we are the venue for price discovery. And as more and more institutions engage, and they want to engage, they want to actually own the asset. That's key, right? On LMAX Digital, you own the asset. You're not just speculating on price, on a paper price, which is all these futures exchanges, right? It means you want to actually own the asset, irrespective of whether exchanges are open, closed, and what happens short term. So we're pleased with the interest. That said, I'd say we're waiting. Myself, LMAX Digital, and the rest of the market are waiting for the real entrance of institutions. So you're waiting for banks. You're waiting for banks to enter the market and offer this product to their client base.
But does it give you some sort of heart, the fact that you've actually got people who are responsible for advising hedge funds and investment managers, that actually they're even considering it? Because maybe this wouldn't have been the case a year or 2 years ago.
I think they have to. I think it's as simple as that, Colin. So yeah, the whole world, the whole market, the crypto market should take heart from that. It's simple. It's been around now for 12 years. It's big enough. It trades like a very heavyweight stock. So quite simply, you have to have some of it in your portfolio. I have a tiny little bit in mine. So it's natural that they bring it into everyone's portfolio, that they start talking about it. I think it's way too early to talk about diversification and making your portfolio less correlated, because ultimately it's still a very, very small percentage.
I'm just going to out you now as a whale in the Bitcoin market, if that's okay.
Earlier on, someone tagged me as a veteran of the FX market. I was not happy with that. My age still starts with a 4, just.
And we'll look forward to your 50th birthday party next year then.
There we go.
What have liquidity conditions been like in the crypto markets over the last couple of months?
So I guess if I had my best sales hat on, I'd tell you they've been immaculate and better than the oil market, better than the
I wouldn't believe that.
No, look, they were sketchy. They behaved the way the commodity markets have done, but those are different issues, right? The commodity markets were what I actually call fulfillment logistic problems. When you're seeing all the turmoil around March, when the pandemic was at its height, or where the worry of the pandemic was at its height, then liquidity was thin across all asset classes. There was a few scare stories in the crypto world, and you saw this massive crash down to 3,800, I think was the low. Around 4,000 was kind of the traded low. And look, a bit like every flash crash you've seen in FX over the past few years, there wasn't many bids out there, hence why it traded at 3,800. On the flip side, what I'd say is, the Bitcoin graph looked like it was going to zero. So did the oil graph. The difference is oil went to zero and beyond. So in a way, you have to congratulate the ecosystem, the Bitcoin ecosystem, because the resilience it's shown through this crisis and previous small crises before is quite remarkable. So I'd say now people are looking at it thinking, actually, hold on a minute, this is an asset that trades. And it may not just all disappear into the ether, no pun intended.
Pun taken. Would you see this as another brick in the wall of credibility that crypto needs? It's something that the industry needs to take forward and market. So look, our market structure held up under the most stressful conditions in a better fashion than certain, higher profile commodities.
For sure. I think every month it exists, every month you see stability, every month you hear about a new bank thinking about it or banking some participants, then yes. So withstanding these market shocks, which are huge. Yeah. You've seen it in gold, you've seen it in oil, you've seen it in majors, you've seen it in cable over the last few years. So I think yes. And it means people, institutional style investors, can have more trust in their view. And that it's not just going to be driven by some odd behaviors, let's say that, on retail derivative exchanges. So yes, I think it's good, but we still need better banking, better credit, and more adoption of the product.
And I guess that credit custody issue is one that we've been, I wouldn't say fumbling around with for a couple of years, but it is a recurring theme, isn't it?
For sure. I mean, look, I can't solve it, right?
Yeah.
It's very simple. If real money asset managers want to trade physical Bitcoin, they need custody, and they need custody they can trust. So they can trust LMAX Digital custody. We have Lloyd's approved custody. We have, we think, the best of breed custody on the street. But ultimately, it comes down to credit, and they don't want to face LMAX Digital credit. So they're going to have to face the credit of a bank the way they do for other asset classes, or build it themselves. I mean, that's the great thing about crypto is you can build your own bank in inverted commas, your own store. It's actually not that difficult, right? The theory is trivial. The practice is somewhat, let's just say, diversified and elongated. So they can do that. So they can trade actively, and then they can hold this asset, if that's what they want, an asset in their portfolio, and they can hold it themselves. So that's the beauty of it. My guess is they still want to effectively use, for want of a better phrase, a prime broker or a custodian where they do other business with, especially when it's so small. Mm. But I think it's coming. I mean, it never happens as quickly as you think. So it may not be in the next quarter. It may not be in the next year, but I think within the next 24 months, you're going to see significant banks offering custodial services for their clients. Otherwise, they're going to lose those clients to other crypto shops.
Mm. Do you think the settling of the price action is kind of helping as well here? I mean, we're talking about a long road, but I mean, last week we saw the Bitcoin halving with all the predictions it's going to go through the roof. And don't get me wrong, it's gone up by just $1,000 since. But volatility in Bitcoin does seem to be a lot lower than it used to be. Do you think we're getting to the stage now where the price of Bitcoin is becoming irrelevant, and that is going to help this sort of shift towards institutions investing more?
I think it's still buyer beware, Colin. I mean, you're going to see more bumps in the road, right? We're only 5 weeks away from this low of 3,800. You know, for this asset, let's be clear about it, right? For this asset class to be significant, right, to even be 25% of gold, the price needs to move up 10x.
Yeah.
That's a lot. It'll probably get there, by the way, but it might be a decade to get there, right? So I think everyone should still be careful and probably take the Paul Tudor Jones approach in terms of percentage of portfolio. And you have to expect you have to expect some flash crashes, right? On the road to 20,000, you're going to see 40% gaps. That's just the reality of this asset class, and that's in a way some of the issue I have with the retail ecosystem out there, or non-institutional ecosystem, is that the people that are getting hurt are the wrong people, right? Institutions understand this. Institutions are not using 100-to-1 leverage. The largest alleged futures exchange for crypto out there offers 100-to-1 leverage. Well, look, you're just going to be stopped out by tea time every day. It's as simple as that. So I think that's my point. Investors, and I take umbrage also with some of the institutional futures. And what are you really trying to do there? So I think it's investors who want to own the asset and can see the true value of cryptocurrencies and digitization of the world over the next decade. In that case, they can ride it out, right? If we have a 40% dip now, so what? They want to own it. It's an opportunity to buy more. But at the moment, people are trying to jump on the bandwagon, tell stories down the pub and say, yeah, I made 50% on Bitcoin. We know those stories don't last in capital markets.
Certainly do according to some of the advertising I've seen on TV, but no, you're absolutely right. And something I wanted to talk to you about is something that strikes me around the crypto market generally, and moving away from Bitcoin to a degree. The problem at the moment, to me, crypto is like pretty much a block trade, or a blockchain trade, maybe I should say. But there's no decoupling between crypto assets. Is that something else that needs to happen? Because, I mean, these digital currencies exist for many different reasons, don't they? Do we need to sort of decouple them in terms of price action to then help build this, I guess, more... You mean
within the crypto world?
Yeah.
I think they are, to be honest. I think there's one asset, it's called Bitcoin. There's Ethereum. Look, someone's going to get it right. Someone's going to launch a token, a utility that's going to work. It's a bit like .com. But there are hundreds of, let's call them politely, altcoins out there. That really is buyer beware, right? So, and they all have if you read their white papers, if you read the logic behind them all, they're sound. But they're really missing that key word of adoption. No one's really using them. And hence, there's no liquidity. So how can you own it? It's like, look, it's emerging market, distressed debt in the 80s and 90s. So that's where it's at. You can believe, some believers will get it right, maybe like owning a mining stock. But ultimately, right now, if you want exposure, Bitcoin's where it's at.
Yeah. Do we need to thin out the ranks of the cryptocurrencies?
Probably. But I mean, look, that's the great thing about it. I mean, the engineers, the inventors, the evangelists can create them like that.
Yeah.
Right? So why not? Because Bitcoin's not perfect, right? I can sit here and tell you about instantaneous settlement. It doesn't happen. In fact, with the halving or the halvening, as the people like to call it, all that's going to happen there is transaction costs are going to go up. That's it. So it's pretty inefficient. That's before we get into the energy required to do the mining. So it's pretty inefficient. It's not yet instantaneous. So we have to let these experiments, these scientific experiments continue. I happen to think at the moment, Bitcoin looks like the winner, but there's plenty of people out there who will tell me Bitcoin Cash is better. So let's see what's next. I think it's very exciting in terms of overall capital market structure. I think instantaneous payments will happen. I think intraday interest payments will happen. I think better efficiency and usage of capital will happen. I think 24/7 markets will happen. This all comes from the crypto world. I'm not going to make a bet necessarily on which one's going to win, but somebody's going to win and someone's going to crack it. So it might be one of the other threads.
What about central bank digital currencies?
At least you said, I'm laughing because at least you said digital currencies. Other people tell me cryptocurrencies. Look, I mean, Vladimir Putin got it right. Okay, yeah. Let's be clear about it. It's central bank cannot issue anything crypto. It's impossible, right? And by the way, neither can Facebook or anyone else. Okay, it's anonymous. It's trustless. It's decentralized. So the one key word there, central. It doesn't resemble anything like a cryptocurrency. But I'll give you the counter argument. It's inevitable we will have digitized currencies at some point in the next decade. There will be a digital dollar. There'll be digital euros, digital pounds, digital yen. Somebody might adopt Bitcoin, right? So some of the countries suffering with hyperinflation might adopt Bitcoin. Of course, the evangelists want that to be the United States, but we're never going to see that. So yeah, I think that digitization of fiat will be excellent for the market, excellent for the world, and will make business and transactions more frictionless. So, but yeah, it's a kind of an oxymoron when people go on about these central bank cryptocurrencies. I guess insert the word digital rather than crypto, and you just about get away with it. But I'm not sure what else they offer apart from what you expect now anyway, which is faster payments effectively.
Tap and go.
Yeah.
We've got just a couple of minutes left, so I want to quickly go full circle with you then. So 2 years into LMAX Digital, what is the future path for that exchange in particular like to you, and what are your ambitions over the next couple of years?
So for LMAX Digital, I think we've got to carry on what we're doing, and I'm surprised where we are today because it's clear. You know, look at any chart, look at any comparison site, we are the institutional spot venue for price discovery in digital assets. It's as simple as that. So I didn't think we'd get there as quickly. I thought there'd be better competition. There isn't. Because all the big names you talk about, they're all derivative houses. They don't actually want to touch the asset. You need to touch the asset if you really want to be in the crypto world. So I think we're going to build on that. And a lot of the fruits of our labor won't be seen for a few years. I mean, most of my time, most of the team's time is prospecting with the bigger funds and the bigger banks who will come. But it might be 2022 rather than 2020 or 2021. In the meantime, we've got 180 institutional clients. Every fund who's significant, who trades the physical asset, is connected. So we need to get more of that. Potentially, we might need to launch other derivative products, but it's derivative products backed by the asset, perhaps not just fiat settled. I mean, what's the point in that? It's just a non-deliverable forward.
Yeah.
Okay. It's about physically settled derivatives. So watch that space. So I think it's very exciting. We've got all the connections we need. Basically, it's the same fix API. It's the same software, different infrastructure that all my participants use in 5 exchanges for FX globally. So they're normally amazed. I literally just send them a new IP. They've already done all the integration.
I think the crypto world is certainly one worth watching. So thanks for joining us. And we can shift you on to the chat for a brief chat over there, hopefully.